Hi guys, a very good morning. So apologies for the 2 minute delay that we have faced. Uh, Again, what did we do in the last class? Shelly Khatri. Okay, so we have Sneha, the offline students, and we have the online students also. Today online there are only two who have joined so far, Shelly and Kunal. Kunal is regular. Shelly, is this your first time attending class? Or have you watched a recording and all that with me? Guys, you know, the ones who have attended my classes before, now you know what is the structure that we follow. Okay, and yesterday was what? Yesterday was the 27th of March, and I've completed all of these 15 topics. So basically, we move to the third chapter. Okay, Sneha, can you tell me what are qualifying interest payments? Those are the interest paid on the business loan. Okay, and why do you say it is qualifying? How does it help a taxpayer? A taxpayer gets a relief. Okay. Relief on tax. Very good. Okay. And can you give me some examples? Okay, sorry. For relief, can you give me some examples? What kind of reliefs can you possibly get? Interest paid, and also for the donations. For the charitable donations. Okay. Aditya is online. Aditya, what happened? Why are you online today? Aditya, you are not well. Okay, fine. All right. So, Aditya, again, as you know, we all know, guys, again, the ones who are watching the recording and not in the live class, the ones who are on the LMS and you are watching me, please know that the first 10 minutes, I basically try to engage with you and interact with you and try to understand how things are, how your life is with tax, right? So, probably I want all of you to see if you can do test your understanding 6. Twins Paul and Grace each have employment income of 54,345. Grace makes a payment of 2,000 to a charity under the gift aid scheme. Right? So in this case, how do we solve? Kunal, Aditya, Shelly, I don't know if you're there, if you've attended classes, I really don't know. Kunal, are you there? Yes. So try test your understanding 6. I want to see if our understandings are strong. And once that happens, then at 10:10 a.m. sharp, which is the scheduled time, we will get started with the new chapter today. Both have the same income, and but in that, Grace is paying a charity and Paul is not paying a charity. So, what will be their tax liabilities? First of all, you need to know already, even before doing any calculation, even without doing any calculation, you need to know that Grace will have a lower tax liability for the simple reason that Grace is giving charity. Now, the calculation, as soon as you get the answer, just shout out the answer or type it in the chat box. Yes, you're understanding 7 also I did in yesterday's class. It was a little complex calculation which we did. Chirag, you are a little late, but Chirag, we are okay. He's not connected to the audio yet. Sneha, you got the answer? You didn't, or you got? So you have to shout out the answer. What is it? Okay, very good. That's absolutely right. Chirag, again, you know, first 10 minutes we're spending in a quick review of what we did in the previous class. I've asked everybody to do test your understanding 6. Aditya, Kunal, you got the answer? Aditya and Kunal, I'm waiting for your answer. Yes. Very good, Aditya. Okay, yes, it's 10, 11, right? So today, the first thing that we're going to look at is 8670. Chirag also got the answer. Today, we're going to look at something known as savings income. What do I mean by savings income? Look, today we will look at in more detail about this specific type of income. As for most people, right, you would be, let's clear this out. Many people, what are examples of non-savings income? Business, employment, trading income, right? However, what is a savings income? This is like your money is earning money. What do I mean by your money is earning money? When, for example, you put money in, say, an national savings and investment account, savings account in the bank, in national savings account, you earn interest, right? So when you put money in the account, the money earns interest. So it's like savings income is the money that your money makes. Are you understanding? So savings income is the money that your money makes. Savings income is the money that your money makes, right? For example, when you earn interest from the bank, for example, you have money in the bank, and that money earns you interest from the bank and building society interest. Building society interest. So any of, when it comes to interest earned, that would be an example of non-savings income, right? Or for example, again, you invest money in a company. It's like your money has gone into a company and now that will earn you money. You get dividends, right? So you will earn dividends. So your money has made money. This money that you've earned, like your interest, you've earned this, correct? You've got extra money. You've got dividends. You've got more money. You are wealthier now. This money that you earn, again, remember your father will come and say, I would want a little percentage from this money, right? So, what does your father say? Your government, in this case, will come and will also tax you on this money that you are earning. Are you understanding? And that how the government will tax you on this is what this chapter is about. So you can make a note of this in simple words. Yeah, done. Okay. Now we're going to look at the next thing. Okay. When you earn interest from savings, we know that the government will tax it, just like your salary, which we saw in the earlier class, in the earlier chapter, which was yesterday, right? The quick revision on that is what? Up to a salary or up to an income of 37,700, the government taxes you at 20%. Again, up to 125,140, the government taxes you at 40%. And up to, above 125,140, you are taxed at 45%. However, some savings income, again, just like in the previous chapter, we said that there is a little bit of personal allowance which is tax free. Same way, some savings income will be tax free. There is, again, the government or even in savings income, there is no tax, there is 0% tax on the on a small amount of savings. Does anybody know how much is this small amount of savings on which there is 0% tax? It is 5,000 pounds. Even in savings account, there is a 0% tax on the first 5,000 pounds on savings. So I'm going to remove this and put that and say on the first 5,000 pounds of savings. Right? So let's look at the textbook. It says a small rate of tax, a starting rate of tax of 0% applies to all taxpayers where savings income falls into the first 5,000 of taxable income. Right? In addition, basic rate and higher rate taxpayers are entitled to a savings income nil rate band. What do I mean by savings income rate nil rate band? Okay, we'll understand that better in illustration 1. Right? But up to, again, you have starting rate. This applies to limited situations where non-savings income is less than 5,000. Sorry, we'll come to that part. Apologies. Right? This is what we've looked at so far. Right? After this, what happens and all that we will look at shortly. Now, in addition, basic rate and higher rate taxpayers are entitled to a savings income nil rate band. So the savings income nil rate band is basic rate taxpayer 1,000, higher rate taxpayer 500, additional rate taxpayer nil. So on savings income, the rates of tax are what? Again, a starting rate of 0% applies to savings income where it falls within the first 5,000 pounds of taxable income. Right? So normally, apart from this, basic rate will be for the first 37,700, 20%, 37,700, 225, 40%, and 125,140 and over is 45%. Okay. Now, again, we will do this with the help of an example, but just make a note of this. Okay. So if I have to summarize this, what does this say? Again, when you get savings income, you have to be taxed on this. Please note that it is the most important thing. Savings income, there will be tax. If you earn savings interest, the taxes that are paid are as usual 37,700 up to that 20%. If your income is up to 37,700, you pay 20%. If your income is up to, sorry, your income is up to 125,140, it is 40%. And if it is more than 125,140, it is going to be 45%. Now the government wants to help you to save money. So if your income is low, the first £5,000 is tax free, right? If your income is low. Then moving on, what happens? For each category, you will have a different kind of tax saving, which we will look at shortly, right? Applying the appropriate rates of tax to savings income. Okay. Savings income is taxed as the next slice of income after non-savings income. We've seen this already, the order. First, we will look at non-savings income, which we taxed, after which we look at the tax for the savings income. The rates of tax applicable to savings income depend on the level of taxable savings income. What is the procedure? First and foremost, the only thing you need to do is the procedure is to first calculate the income tax on non-savings income. Income tax on non-savings income, which I think we've done already. Okay. After which, how to apply the different rate of tax on savings income in the following method. We will look at, I don't want you to just mug it up, but again, we have the different rates and categories. Remember, I told you that if your income is less, then you get 5,000 tax free. Yes. So if your taxable non-savings income is less than 5,000, right? There is a certain allowance for you. There is a little bit of a relaxation for you. Right? First is, again, the starting rate is what if your non-savings income is below £5,000, right? If no taxable non-savings income, the first 5,000 of taxable savings income is taxed at 0%. So if you don't have any non-savings income, taxable non-savings income, the savings income, the first 5,000 becomes tax free. So remember, I told you that if your income is less than 5%, is less, then you will get 5,000 tax free on your savings income. Imagine that a person does not have a job or business. He only gets interest and dividends, right? Now, what will happen is, because his non-savings income, in this case, his non-savings income is below 5,000 because he's not earning anything, right? So his non-savings income is below 5,000. So all he has is his savings income. And if all he has is his savings income, suppose his savings income is 20,000, right? The first 5,000 in that, okay, the first 5,000, the first 5,000 in this will be tax free, right? Right? Now, the other category is where your taxable non-savings income is below 5,000, where this person has a job. So first category, is where a person does not have non-savings income. He only has savings income. In this case, his non-savings income, sorry, what? His non-savings income is below 5,000, correct? Basically, he does not have any savings income as per the example. He has no savings income, right? Because as I said, he does not have a job or business. So all he has is his savings. In this case, his taxable savings income, the first 5,000 will be taxed at 0%. Just look at what I have written. Do not look at the textbook. Keep your life simple and easy. Make a note, Sneha. Again, because many people struggle with this. So make sure you are writing down notes. Today I'll go a little slow. The next category is again taxable non-savings income is higher than 5,000. That is, he has a job. Okay. John has a job and his taxable, again, coming from the previous chapter, his taxable non-savings income is more than 5,000. In this case, what happens? Coming to his savings income, the 0% offer, 0% offer is not applicable anymore. Okay, so we will look at the middle one a little later. We will come back to it. Okay, now coming to the next part. Savings income nil rate band. Okay, what does this mean? A basic rate taxpayer. Okay, for each category, we will look at this, right? But before we look at that, I want you to be clear with the income tax computation. How will you show the income tax? His trading income, employment income, all of his non-savings income is in one place. He has his total income. You deduct his, any reliefs he gets to get the ANI. You deduct his personal allowance to get the taxable income. In this chapter, we've looked at saving. We're looking at savings income. Okay, we will take into consideration certain reliefs, personal allowance, taxable income, dividends, we will see, and we will. So this is the how the format is. Now, remember that in the tax examination, the personal allowance and reliefs are deducted from the income in the following order. We've seen this in the earlier chapter also. Let's look at illustration 1. Jane received bank interest of 3,000 during the tax year. Calculate Jane's income tax liability assuming she had employment income of 11,000, 15,200, and 29,000. So what do we do in this case? Here, what happens is just let's only focus on 11,000. How much is his employment income? Jane's employment income, which is his non-savings income, is 11,000. right? That is clear. Then what happens? He has personal allowance that you can deduct. How much is the personal allowance that you can deduct? 12,570. But the problem is, think about it. His income is only 11,000. So how will you deduct 12,570? In the last chapter, we did see that. But in the last chapter, he did not have any other income. But in this chapter, he does have other income also. He has savings income of 3,000. So personal allowance of only 11,000 is deducted from the non-savings. Okay, so his taxable income becomes zero. Sorry, right. So if his taxable income is zero, then what will be his tax liability? His tax liability will also be zero. Now, on the other hand, he has savings income also. Let's look at his savings income. He has savings income of 3,000. But remember that not all of that savings income will be taxable. Remember, out of the personal allowance of 12,570, only 11,000 was deducted from the employment income. Therefore, I still have the balance personal allowance of how much? 1,570, which can be deducted to get the taxable income for savings of 1,430. So his total taxable income is only 1,430. Now that you have seen this, what is the most important thing that you need to know? How much will we tax this guy at? 20%, 40%, 45%? How much will we tax him at? How much percentage will we tax him at? Okay, we will come to that part. But I hope taxable income, how much we will tax at, we will leave now. We will come to that. Let's look at part B. If Jane has an employment income of 15,200, then again, employment income is 15,200. Okay. And obviously, we will have a personal allowance of 12,570. And remember, you have to follow the order. If you have employment income, all the personal allowance, if you have enough employment income, all the personal allowance will be deducted from that. So personal allowance has been deducted. So how much will the taxable income be? 2,630. Okay. We will not look at the tax liabilities. Here we're only looking at taxable incomes, okay, in this question, as of now at least. So the taxable income is, the non-savings income is 2,630. Then coming to the savings income was 3,000. And again, remember, how much is the personal allowance left? There is no personal allowance. So taxable income becomes the full 3,000 as there is no personal allowance. Okay. Next is part C of the question, where Jane has an employment of income of 29,000. In this case, what do you do? Employment income, personal allowance, full personal allowance is deducted. This is the same as last chapter. And the taxable income, 16,400. Now coming to the savings income. Again, the entire savings income will be taxable because there is no personal allowance. The taxable income is 3,000. The part A, part B, part C, we know how much are the taxable incomes. So just for our information and for our ease, taxable income, total taxable income in part A is non-savings income is 0, savings income taxable is 1430. Here in part B, the total taxable income would be 5,630. And here in part C, the total taxable income is 19,430. Let me just check if it's correct. 19,430. Yes. Total taxable income 19,430. Is it easy so far? 19,000. Oh, how much we said? 430. Okay. For now, you just need to know this much. Just see if you are comfortable with all the totals. I'll give you 1 minute. Just go through and try to see if you've written this down and if everything is okay. Can we move on? Now what happens is, let's look at the first category of how much the total income being 11,000. See, in this case, the non-savings income is 0 and the savings income is only 1430. And if you remember, we said that if that happens, the tax rate will be how much? 0%. So in this case, the tax rate will be 0%. So obviously the tax liability will be 0. Okay. Moving on, the next part is, again, if we are looking at 15,200 employment income. So here you have 2630 and 3,000. In this case, Jane has non-savings income of 2630, right? Which is below 37,700. So this amount of 2630, as usual, is taxed at 0.2%, which is, sorry, 20%. So 20% of 2630 is how much? There is no problem here. This is normal non-savings income. How much? 526. Aditya, any problems with where this 526 came from? Chirag, any problems with this 526? Now what happens is, again, let me put that in red. Going back to the top, this part, we know that we've understood that no taxable non-savings income. The first 5,000 of say taxable savings income is taxed at 0%. Right? Now, taxable non-savings income is below 5,000. In that case, what do we do? Taxable non-savings income is below 5,000. Like in which case, here in this case, it is below 5,000. So savings income falling into the rest of the 5,000 is taxed at 0%. That is up to 5,000. We said again, when the non-savings income is zero, then of there is no tax. Basically, there is what? Non-savings income, there is no non-savings income. So the first 5,000 of savings income is taxed at 0%. That is what we looked at in part A. Then coming to part B, what are we looking at? We're looking at number one, again, if the non-savings, taxable non-savings income is below 5,000, the rest of the amount up to 5,000. How much is the rest of the amount up to 5,000? 5,000 minus 2,630 is how much? So an income of up to how much? 2,370 of savings income will be taxed at 0%. I will repeat myself. Again, if you don't have non-savings income at all, then up to 5,000 of your savings income is taxed at 0%. So zooming out a bit. In part B of the question, what did we say is if your taxable non-savings income is below 5,000, it is there, but it is below 5,000. The remaining part of that 5,000 for non-savings income, whatever is the remaining amount, how much is the remaining amount? The remaining amount is 5,000 minus 2,630, which is 2,370. That much amount of savings income will be taxed at 0%. I will again, unfortunately, have to repeat myself for the third time. Whatever is, I'm sorry, not whatever is, if your taxable non-savings income is below 5,000, the remaining of that amount, how much is it? That much amount of savings income will be taxed at 0%. So what I say is, if the non-savings taxable, okay, if the taxable non-savings income is below 5,000, the remaining amount up to 5,000, whatever it is, you calculate. That much amount of savings income will be taxed at 0%. That much amount of savings income will be taxed at 0%. Meaning that in this case, if the taxable non-savings income is below 5,000, the remaining amount up to 5,000, how much is it? 2,370. 2,370 of savings income will be taxed at 0%. So up to 2,370, we are taxing at 0%. So the tax liability becomes 0 up to 2,370. After that, how much is remaining in savings income? 2,370, I have taxed at 0%. But I still have a savings income of how much? 630. 630, what will we do? How will we tax it is what we have to look at. Right? But I hope this much part, because a lot of people get confused with this much. Oh, how did that 2,370 come? How is it taxed? And so on. Right? Now, this is where the second paragraph falls into our explanation part. Look at the second paragraph. A basic rate taxpayer, okay, the next 1,000 in the savings income, the next 1,000 falls in the savings income nil rate band and is taxed at 0%. What do I mean by that? Is look at this. Jane in part B has a total taxable income of only 5,630, meaning that Jane is a basic rate taxpayer. Okay, so what happens is, yes, we made use of this benefit for Jane, but after the excess amount 630 up to 1,000, because Jane is a basic rate taxpayer, is also taxed at 0%. Therefore, the tax liability would be 0. So in this case, the total tax liability in for Jane is only 526. This 526. Aditya and Chirag, clear? Again, people get very upset and confused with this. So that's why I'm taking some time to do it. Is this clear, Aditya and Chirag? Yes. Now, let's look at what small recipe I had made and kept on my table for part C of the calculation. In part C of the calculation, what happens? Now, again, remember what happens. First of all, we need to see how much is Jane's income. Again, Jane's income in this case, the taxable income for Jane is 16,430 plus 3,000, 19,430. Right? So is Jane a higher rate taxpayer? No. In this example also, Jane is a basic rate taxpayer. Right? So this 16,430, we all know is taxed at 20%. So 20% of 16,430 will be how much? From 3,200 and 3,286. So the income tax liability here is 3,286. Now what we have to do is, again, we have to calculate the amount. Remember, what did we say? 3,286. Okay, 3,286 is the tax liability in the first case. But here, coming to the savings income, we want to see that in the non-savings income, is the taxable income less than 5,000? Why? Because in my previous example, when the taxable income was less than 5,000, whatever is the remaining amount, that much amount of savings income was taxed at 0%. Correct? But in this case, the taxable non-savings income is more than non-savings income is more than 5,000. Therefore, what happens? We have to see this. If taxable non-savings income is more than 5,000, there is no excess amount which can be taxed in savings income at 0%. I will repeat. In the part B, only the taxable non-savings income was 2,630. So there I still had 2,370 amount balance up to 5,000. That much amount of savings income was taxed at 0%. But in this case, because the taxable non-savings income is more than 5,000, there is no balance amount left there for which savings income can be taxed at 0%. The taxable non-savings income is more than 5,000. There is no balance amount left from that 5,000 of which savings income can be taxed at 0%. So that is like a bad news for us in this case. Okay. So I hope that part is clear. Okay. Now, again, we need to understand that Jane is still a basic rate taxpayer. So the next 1000, remember this, I just told you that if, forget the first 5000, we are not getting that. That benefit is not there. But if you are a basic rate taxpayer, the next 1000 falls in the category of being taxed at 0%. So out of 3000 that is there, 1000 from this 3000, right? Tax liability. Out of 3000, 1000 will be taxed at 0%. Why? Because of this. How much is the remaining amount? 2000. So the tax liability for that 2000, again, you are a basic rate taxpayer. Therefore, in this case, you are paying the remaining 2000 at 20%, which is 400. So in this case, for Jane, how much is her total tax liability? 3686. So now showing you the textbook, look at part A, see if there's a problem. Then I will scroll to part B, show you that we will see if there's a problem. Then we will look at part C and see if there's a problem. Let's look at part 2, that is part B. See if there's a problem. Here I've put part B. My notes is also there. Textbook is also there. It's 11 o'clock. Look at part C. So guys, let me know how much is your understanding. I hope this, again, people generally struggle with this chapter. That's why I'm so particular about your understanding for this. Please let me know, Sneha, how much? Others online? Aditya, you haven't said anything. Okay. Aditya, are you there? Yes. Okay. So now we will move to another question. Where is it? Illustration 2. Alonso received bank interest for his savings income is 7,850. His non-savings income will be 43,000 pounds. In this case, let us calculate the tax liability. Remember, again, non-savings income, he has income 43,000, from which there is something known as personal allowance that is deducted, 12,570. Therefore, his Alonso's taxable income will be 30,430. This is for his non-savings income. This much is to be taxed. Then coming to his savings income. In case of his savings income, again, there is no more personal allowance left. So his savings income will be entirely taxable taxable income will be 7850. For those of you who don't understand, remember there is no more any personal allowance left. So the entire savings income becomes taxable. But again, how much is the tax liability in that we will calculate. But his taxable income is 30,430 plus 7,850, right? Therefore, his total taxable income will be total taxable income will be 38,280. Meaning, is he a basic taxpayer, basic rate, higher rate? What is he? He's crossing 37,700. So he will be a, we will, I'll show you, right? Here he has a total taxable income of 38,230. Okay, here, let's look at this. Again, for example, a taxpayer with taxable income of 45,000 is a higher rate taxpayer as the individual has taxable income falling in the 37,700 to 125,000 category. So we are looking at what? We are looking at the total taxable income. Okay. So here what happens is, which illustration is this? Illustration 2. So now he would be a higher rate taxpayer, but remember this, we will up to 37,700, we will follow 20%. First and foremost, we need to know he's a higher rate taxpayer. I hope there is no doubt about that. He's a higher rate tax up to how much? Up to 37,700, he will be taxed at only 20%. So this 30,430. So far, what is his income? Taxable income is 30,430. Because it falls under 37,700, we're only taxing him at 20%. 20% of 30,430 is how much? 6,000 something. 6,086. 6,086. So the first tax liability we have now. Anybody, I hope nobody has problems as to why we have taxed him at 20% over there. Right? Now, going back over here, again, I just felt that it's better to explain these rules to you with the help of this example without reading it. Right? Remember this, if you are a higher rate taxpayer, see, first of all, his non-savings taxable income is more than 5,000. So there is no question of balance being there. That much amount we will tax at 0% for savings income. That this entire story is not there in this example. This entire story is rubbish for us. But again, if you are a higher rate taxpayer, 500 of the savings income will be taxed at 0%. So out of 7, 8, sorry, let me put it here in tax liability like this. Otherwise, it will be confusing. 30,430. Right? Out of this 7,850, 500 will be taxed at his tax. Yes. Total taxable income. Yes. So total taxable income is crossing 37,700. Therefore, he is a higher rate taxpayer, right? But in this case here, because he is a higher rate taxpayer, 500 of savings income will be taxed at 0%. So guys, tell me one thing. So far, how much have I taxed? 30,430 is taxed. 500 is taxed. So far, 30,930 is taxed. So far, 30,930 is taxed. And I still have out of 38,280, I have taxed 30,000. How much? 30,930. I have taxed. So 7350 is still needs to be taxed. We know this. But remember, only up to 37,700 is at 20%. So whatever is the next amount, only a total of 37,700 will be taxed at 20%. So how much is that amount? See, already 30,930 has been taxed. So 37,700 minus 30,930 is 6,770. Again, for those of you who did not understand, so far I've already taxed 30,430. See here, I've highlighted that. And I've already taxed 500. So I've already taxed 30,930. Only up to 37,700 you will fall in the 20% category. So how much is left to be taxed at 20%? 37,700 minus 30,930. How much is the balance? I am getting an answer of 6770. Let's check that. Yes, 6770. So only 6770 will be taxed at 20%. 20% of 6770 is how much, Sneha? So I hope all of you understood where did this 6770 come from, okay? I'm keeping the calculation open. How much is it? 13? So the tax liability here is 1354. And then after that, up to 37,700, we said we will tax at 20%. How much is left? Remaining tax liability will be again from 38,280. Already 37,700 has been taxed. So how much is it? 580. So 580 will be taxed at the higher rate of 40%. 40% of 580 is 232. So I want you all to kind of calculate and tell me what is Alonso's total tax liability. 6,086 plus 1354 plus 232. How much is the total? Again, I'm not getting the answer fast from Aditya and Chirag. How much? No, Sneha, let them tell. 6,086 plus 1354 plus 232 is 767. Let's check if that's the answer that we've got. Yes, 7672. Okay, so I'm going to keep the answer, my answer and the textbook answer side by side so that you're able to compare and see if there's any problem, any doubt, any question before we look at part B of the question. Guys, I hope everything is crystal clear and there is absolutely no problem. Let's go to part B of the question where he has an income of 53. I'll leave part C for you to try, but part B alone I will explain. Okay. Here again, savings income is 7850. Non-savings income is how much? 53,000. No, I think you know what I think I'll do C, because B probably there's not much difference. C is like a big amount. So I'll do C. B you can try on it. 145,000 is the non-savings income. So here again, we need to understand what is the taxable income. First step is to understand the taxable incomes, right? So how do we get the taxable incomes? Simple, as usual. Non-savings is 145,000. Okay, we've seen this. From that, what do you deduct? Normally personal allowance, but here how much income does he have? He has more than 100,000. So that needs to reflect in the personal allowance. So here personal allowance will automatically fall to 0. Again, Aditya, in this case, there will also not be, there is no charity given, there is no donation that has happened. So there is no any adjusted net income also. Personal allowance will just fall to 0. So the taxable income in this case will be 145,000. What about savings income? In case of savings income, 7850 is here, right? Now, from that 7850, again, there is no personal allowance. So taxable income will be 7850. So 100 and total taxable total taxable income will be 145,000 plus 7850. How much? 4,52,850. What time is our break, guys? 11:25. Right? So 1 lakh, I'll finish this and we can move. 1,52,850. I know this. Now, what kind of taxpayer is this person? Basic, higher, or additional? Additional, because he has crossed that 125, 140 threshold. So here, he will be a additional rate taxpayer. So 20% up to 37,700, up to 125,140, 40%, and more than 125,140, you will be taxed at 45%. Now again, how do we do it? How much is our non-savings income? 145,000. But what you need to understand is only up to 37,000 he will be taxed at 20%. And this guy is not even giving any charity, or he doesn't even have any loan qualifying interest payment. So there'll be no increase in the basic rate band. 37,700 will be taxed at 20%, which is, we all know, 7,540. The remaining non-savings income is how much? Again, out of 125,000, 37,700 has been deducted. So how much is left? 87,440. Again, for those of you who are clueless, look up to 125,140, you will pay 40%. Right? Already up to 125,140, we will pay 40% off. But already 37,700 has been taxed at 20%. So the balance amount is 87,440 that has to be taxed at 40%. Right? Then what happens? Again, how much is the total? 125,140 plus 37,700. How much is it? 162,840. But he still has what? Sorry, 87,440 has already been taxed. 37,700 has already been taxed. So how much is the balance that needs to be taxed? Because he has an income of 145,000. So 125,140 has already been taxed. See, already taxed 125,140. Out of that 125,140, 37,700 was taxed at 20% and 87,440 was taxed at 40%. Already 125,140 has been taxed. So the remaining is how much? His income is 145,000, out of which 125,140 is already taxed. So the remaining taxable income, non-savings taxable income is 145,000, out of which 125,140 is already taxed. Is it 19,860? 19,860. This will be taxed at 45%, which will be 8937. So 7540, 87,440, and sorry, the answer is 34,976. Okay, sorry, we didn't do it. In fact, 34,976. So we've got the tax liabilities, but only first half of the question is over. We've only done the non-savings income. This guy also has a savings income of 7,850. Now what happens to this savings income? 7,850. Remember, does he get this? The question I want to ask you is, does he get this? That 5,000 excess of non-savings income, does he get that? No, he does not. Right? Because his non-savings income is more than 5,000. So he does not get any 0% off on his savings income. What about the additional rate taxpayer? For the additional rate taxpayer, there is no additional savings, right? For a basic rate taxpayer, if you remember, up to 1,000, he will get up to 1,000 of the savings income, he'll get 0% tax. If you are a higher rate taxpayer, up to 500, it will be 0%. But because this guy is an additional rate taxpayer, you will not get any 0% anywhere. So this entire 7,850, because he is an additional rate taxpayer, this entire 7,850 is taxed at, which will be 3,533. 3,533. Therefore, his total tax liability in this case will be how much? 7,540 plus 34,976 plus 8,937 plus 3,533. How much would it be? 54,986. Can we check? $54,986. So again, I'm showing you the question, sorry, the textbook and my answer side by side, so that you are able to compare, see if there's a problem, and then we can successfully go for the break.
Sir,
Yes, Aditya. Yes, tell me.
hello.
I can hear you. Tell me. Aditya, I can hear you.
Sir, I have a doubt.
Yeah.
When my non-savings income is less than 5,000, but my total taxable income is more than 37,700, how will the remaining amount affect the taxable income?
We will see that. Don't worry.
Okay, sir.
Okay, so now you can move for your break. Ensure that you come back. Chirag, clear? Kunal is not here today. Only Kunal is always there. Okay, guys, you can go for your break. Yes, guys, let's continue. 11:36. Now let's look at test your understanding one so that we have more practice. Chirag and Aditya, you're here. Jamie received a bank interest of 3350 uh, 3350 during the tax year. Calculate Jamie's income tax payable, assuming he also had employment income and paid deductions in the tax year 2023 2024. Right? So, what do we do in this situation? How do we solve this question? Again, I'll look at the first part. Again, bank interest, and she has taxable employment income. Yes. So again, remember there is non-savings income. I'll quickly do this because there is a new thing here where you have pay as you earn also. Non-savings income is 25,000. You know, personal allowance is 12,570. So we have taxable income. How much? 12,430. Right? So non-savings income basic rate is 12,430 into 20%. Why is this 20%? Because remember, okay, sorry. Even if we add up the savings income is how much? 3,350. So if we add the savings income and the non-savings taxable income, and savings income is 3350. Again, even if I do it step by step for you, personal allowance will not be here. So savings income, taxable income will be how much? 3350. Therefore, in this case, what happens is no matter what you do, the total taxable income is 15,780. I can do the calculation mentally. 15,780. Now, whether it's correct or not, you can confirm. Can you correct and check and tell me? 15,700. Yes, it is 15,780. So we fall in the basic rate taxpayer category. So in this case, what will I do? Again, this 12,430 obviously will be taxed at 20%. 20% of that is 2,486. Then what happens? Second is after that, remember, because non-savings income has crossed 5,000, that 0% thing is not there for the savings income. However, because you are a basic rate taxpayer, up to 1,000, you get 0%. So the tax liability will be zero. After that, the remaining amount, how much is the remaining amount out of 3,350? 1,000 is taxed at 0%. So the remaining amount is 2350. Tax at how much? The usual 20%, which is 470. So the income tax liability will be 2,956. This is the income tax liability, but there was pay as you earn. How much is pay as you earn? 2630. So how much is the tax payable? Yes. Guys, try B. Just try B. Yes, guys. What answer did we get for 47,500? What was the pay? See, here in this case, the tax payable is 2956 minus 2630. 2956 minus 2630 is 326. 326. Right? Now, in this case, 47,500, when it is 47,500, what do you do in that case? Again, it's very simple. Let me just do that. After that, C you do. B you've done, is it? C I will complete for you. Guys, Chirag and Aditya, have you done B? Next is Jamie, 16,100. Non-savings income, 16,100. Okay. Jamie has, again, savings income of 3350. So the total tax, the total, okay, remember, there has to be a personal allowance that has to be deducted. So personal allowance is 12,570. Therefore, we have what? We have, yes, we have taxable savings income of how much? 3530. Savings income is what? 3350. So there is no change there. So taxable savings income is 3350. Therefore, the total taxable income is 6,880. Check. Total taxable income is 6,880. Right? This is your total taxable income. Right? Once that happens, you are clear. Remember, he falls in the basic rate category. So 3530 is taxed at how much? 20%. 20% of 3530 is 716. 706. Right? Then what do we have? Okay. Then we have, remember here, he has an income of less than 5,000. So the balance amount savings income 706. The balance income is what? Balance income is 1,470. So 5,000 minus 3,530 will be 1,470. This much amount has to be taxed at 0%. We saw this where? We saw this over here. This much amount of savings income will be taxed at 0%. So this was the non-savings income. Non-savings income coming to the savings income up to 1470 has to be taxed at 0%. Zero. Then how much is remaining? Remember, he's a basic rate taxpayer, right? Again, another 1000 will also be taxed at 0%. Why? Because we said that a basic rate taxpayer, after this, again another 1000 is taxed at 0%. Where did we see that? We saw this here. In this case. Okay, the third is what? How much is left out of the savings income of 3000? Did we check this correctly? The savings income is 3530. Here we took 20% of that. We have to take 20% of 3350. Savings income is 3530, very good. Non-savings income tax liability. That's savings income is 3350, right? Sorry. So 20% of that was how much? 706. Now, out of a non-savings income of, out of a savings income of 3530, 2470 is over. 3530, out of that, 2470 is done. 3350. Yeah. Out of a savings income of 3350, 1470 and 1000 has already been taxed. So 2470 has already been taxed. So only 880 savings income is left, which is taxed at 20%. So 880, 20% will be 176. Therefore, the total tax liability will be how much? 706 plus 176. How much? 882. Let's check the answer directly. Which test your understanding is this? 882 part C. Sorry, test your understanding 1 part C. Part C. 882. This is the tax liability. Now, on this, we also have a pay as you earn. So how will you deal with pay as you earn? There's a pay as you earn of, so the total tax liability is 882. The pay is 850. So the tax payable is what? 882 minus 850 should be 32. So the tax payable is 32. I'm putting the final answers in black. We have the tax liability also, and we have the tax payable also. Is this clear? Chirag and Aditya, clear? Next is we're going to, guys, before I move on, let me just kind of make a note of everything we've done. Okay, so invest, this is savings income. We've looked at the rates of tax. Okay. We looked at what is the starting rate, 0%, the 0% for up to 5,000 of the non-savings income. We looked at this order we had anyway seen even in the earlier chapter. We looked at illustration 1. We looked at illustration 2. We looked at test your understanding 1. Right. Next thing we're going to look at is dividend. What is dividend? What is dividend income? See, the first thing we need to look at is, apart from receiving income as interest from the bank, you would make investments, right? Maybe you buy shares, right? You receive profits. Those profits are the dividends, right? Now, dividends received are charged to the tax year in the tax year in which the dividends are received. So dividends are charged in the year, in the tax year, they are received. Okay, just make a note of this much. Switch off the AC for some time. Now, guys, we will now look at
12 o'clock.
illustration 4. Jeremy earned employment income of 14,850 and received dividends of 4,500 in the tax year 2023-2024. Pay as you earn of 600 was deducted in respect of the employment income. Calculate Jeremy's income tax payable for the tax year 2023-2024. Okay, so what do you do in this case? Remember, he has a non-savings income of 14,850, and we know how to treat a non-savings income. We saw this in the earlier chapter. So personal allowance will simply be deducted, and we will get the taxable income of how much? 2280. We've got the taxable non-savings income. Next, we look at the dividend income. How much is the dividend income? The dividend income will be 4,500. Entirely will be taxed. So obviously there's no personal allowance here. The taxable dividend income will be 4,500. Right? So you have the taxable dividend income and the taxable non-savings income. So the total taxable income will be 6,780. It is in fact even mentioned in the illustration. So the total taxable income is 6,780. Right? So I hope this is clear to everybody. Right? Now, once that is over, then what do we look at? 6,780 is there, right? And obviously, non-savings income, we will start as usual. Non-savings income, see, we are in the basic rate band. So that entire 2,280 is taxed at 20%. 20% will be to 456. Non-savings income is taxed at 456. Now, when it comes to dividends, right? How much is the dividend income? 4,500. Remember, the first 1,000, there is a nil rate band. That basically meaning that the first 1,000 of dividend income will be taxed at 0%. The dividend income, first 1,000 is taxed at 0%. And the remaining, how much is the remaining dividend income? No. 4,500 is the dividend income, out of which 1,000 has been taxed at 0%. So how much is the remaining dividend income? The remaining dividend income is 3,500. And the question is, how much will you tax? Go back to this table. Here, if you are a basic rate band taxpayer, then the dividend the dividend tax payable will be 8.75%. So 8.75 into 3,500 will be 306. Therefore, the total tax liability will be how much? 456, 762. 762. Out of which there is a pay as you earn that needs to be deducted. Pay as you earn is 600. Therefore, the tax payable is 160. As simple as that. Very, very easy life. Aditya and Chirag, clear? Let's look at illustration 5. Today's date is 28th of March. March 25. We look at illustration 4 and we look at illustration 5. What does illustration 5 say? Illustration 5 says this. Emain earned employment income of 34,250 and received dividends of 17,500 in the tax year. Pay was 3680, was paid in respect. I think this question, there's nothing new here. So I think we can just like walk through it. 34,000 from which 12,570 is deducted. So taxable non-savings income is 21,000. Just follow my cursor. 21,680. Dividend income is 17,500. So entirely it is taxable. So the total taxable income is 39,180. Right? Now, from that, again, we are a higher rate taxpayer. Right? So, again, up to 21,680, which is the tax rate. I mean, the non-savings income. Up to 37,700, we'll pay 20%. So here you see 21,680 is paid at 20% as usual. Then remember, dividend income, the first 1,000 is free. No need to pay taxes. So 1,000 is taxed at 0%. So your tax liability is 0. Then the remaining, again, see, you have a dividend taxable income of 17,500, out of which 1,000 is paid. Sorry, is taxed already at 0%. So how much is left? 16,500. Right? But remember, already, up to 37,700 only we fall in the basic rate category. Already 21,680 has been taxed. 1,000 already has been taxed. And now total we can tax at the basic rate is 37,700. So what would be the missing figure here? 37,700 minus 22,680. 37,700 minus 22,680. which is 15,020. So this missing figure here that will be taxed at the basic rate is 15,020. And remember, basic rate for dividends is always going to be 8.75%. So 15,020 into 8.75% is 1,314. Now, after 37,700 has already been taxed, the remaining amount is how much? Remember, from 39,180, 37,700 is already taxed. So the remaining amount is 37,700 is 1,480. This 1,480, the higher rate category for dividends, remember, is 33.75. Therefore, that 1,480 is now taxed at how much? 33.75. Therefore, you get a tax liability of 500. 33.75% of 1,480 is 500. So 500 plus 1,314 plus 0 plus 4,336 will be 6,150. That is your tax liability. But as per the question, there is also a pay as you earn of 3,680. Therefore, the income tax payable is 2,470. Easy. Aditya and Chirag, clear? So illustration 5 also done. Probably I'll do test your understanding 2, and then illustration 6, I leave it for you. Illustration 6, test your understanding 3, 4, all that. I leave it for you to try. Let me do test your understanding 2. Again, non-savings income in this case is 45,100, right? So of course, we will have to take into consideration personal allowance. Personal allowance will be 12,570. Therefore, your taxable non-savings income will be 33. Taxable non-savings income is 32,500 and 530. Right? Now what happens? Your bank interest income is 2,000, and all of that 2,000 is taxable because personal allowance has been exhausted. Taxable bank interest is 2,000, and then taxable dividends received are also, there be no revision to it, everything will be taxable. Taxable dividends are 6,000. So your taxable income is a total of 32,530 plus 2,000 plus 6,000. How much is that? Total taxable income will be 32,530 plus 2,000 is 34,530. That 40,530. 40,530. So we are a higher rate taxpayer. That is clear from this information. Now that we know that we are a higher rate taxpayer, we will make the tax calculations now. Right? How will you make the tax calculations now? Again, this is the total taxable income, which is 40,530. Right? So again, we will start off with the non-savings income of 32,000. Non-savings liability will be 32,530 into 20%. 20% of 32,530 is 6,506. Okay, next is the savings income. Savings income, which one? Remember, bank interest. And again, remember that non-savings income is more than 5,000. So you will not get any 0% on the remaining amount here, right? But because you are a higher rate taxpayer, 500 from interest earned up to 500 is taxed at 0%. So I know that bank interest earned is 2,000, but in that 500 of that bank interest will be taxed at 0%. We've already seen this in the previous examples, multiple examples, why it is 0%. Remaining, how much is the bank interest? Out of 2,500 has already been taxed at 0%. The remaining bank interest that will be taxed, the remaining bank interest is 1,500. Because we are a higher rate taxpayer, we will have to consider paying more. But remember, so far out of 37,700, only 32,530 plus 500 has been taxed. That's why we have still not reached the threshold of 37,700. Therefore, we will tax this at 20%, because although we are a higher rate taxpayer, we haven't yet crossed the threshold of 37,700. Therefore, 20% of 1,500 is 300. Right? So bank interest is also done. Now, what is left? The dividends income. And dividends income is 6,000. And always remember, first 1,000 is taxed at 0%. First 1,000 is taxed at 0%. So this will be 0. And then after that, what happens? The remaining amount is 5,000. And remember, we are a higher rate taxpayer. So dividends income will be for the remaining 5,000. Given that we are a higher rate taxpayer, what will happen? 33.75. But we need to make sure whether we are crossing the threshold of 37,700. 32,530. How much? 32,530 plus 500 plus 1,500 plus 1,000. Have we crossed the threshold of 37,700? No. How much is the total? 35,530. So how much is, again, we have only reached 35,530. The threshold is 37,700. So how much is the balance that is still pending at the basic rate? 2,170. Therefore, because we haven't yet crossed the threshold of 37,700, 2,170 of the dividend income will be taxed at the basic rate of how much? 8.75%. So 2,170 into 8.75 is how much? 100 and how much? 189.8. So dividend income. So again, remember, out of a dividend income of 6,000, 2,170 has already been taxed at the basic rate. How much is the remaining dividend income? Sorry, 3,170 has already been taxed. So the remaining pending dividend income is how much? 6,000 minus 3,170 will be 2,830. 2,830, because we've crossed now the threshold of 37,700, given that we've crossed it, 2,830 into 33.75 will be 955. Therefore, your total liability will be, total tax liability, add up all these figures. Total tax liability will be 6,506 plus 300 plus 189.8 plus 955. How much? 7,950.9. Can we check if the answer is right? Which test your understanding is this? Is this 2 or 3? 2. Again, the ones attending the recordings, please let me know. We have a hotline number. Message on that number if you have any problems. Test your understanding too. 7950.92 I got. I mean, they've rounded it off to 7951 because 7950.92 instead of saying 7950.92, they've rounded it off to 7951. I hope this is clear. Comfortable? Aditya and Chirag, clear? Happy? Very good. Perfect. Now, guys, after this, again, I've done so many calculations in this class so far. But after this, I would definitely want, like, for example, illustration 6. You try it on your own. Just try probably situation A. If you get the right answer, I'll not do B and C. It means you're comfortable. Or try situation B. If you get the correct answer, it means our understanding is good, right? But if you get the wrong answer, I'll do illustration 6 also. But if you get the right answer, it means this topic is clear, so there's no need to like waste too much time. We can go to savings accounts. So try situation B for illustration 6. Please, no malpractice. Just make sure that you are completely doing on your own. We will see if you get the right answer. What's the answer you got, Sneha? Aditya and Chirag, what answer you got? 8238. Check Aditya and Chirag if you got the right answer. 8238. Yes. So Aditya and Chirag, just see if you got the correct answer. If you did, then it means that everything is okay. Chirag? Chirag, you got the answer?
Sir, I have a question. Hello.
Sorry, you got or no? I couldn't hear you. Yeah, you got the answer?
Sir, sir, I have got the answer, but I used latest textbook. So they used dividend income nil rate $500.
Dividend income nil rate $500. Okay.
Like you are using FA 2023 book, but
Yeah.
I have latest book.
No. See, don't worry about that. Those changes I will talk to you about. Okay. For now, just those are very small things that you have to make note of. But you got the method how to do it?
Yes, sir. Yes, sir.
Yes. Okay. Next is what? Okay. Now we will look at savings accounts. What is a savings account? Remember, we've seen this earlier that savings is encouraged by the government. Okay. And individual savings accounts is what we are going to look at in this section of the chapter, post which we just have like this married couples and civil partners, and that's it. End of story. Okay. So where is this? What are we going to do is, see, we will look at directly Just have a read of illustration 7. Ahmad sold 75,000 pounds of 6% yields, including accrued interest, on 31st October 2023 for proceeds of 120,000. He originally acquired the gilts on 1st May. So basically, gilts is where he earns interest, right? Interest is payable on 30th of June and 31st of December each year. Calculate the amount assessed on Ahmad as interest income from this investment for the tax year. So in this case, what happens and what do you do is what we are going to look at. Okay. Now again, a little more about guilds and savings accounts is necessary that you know, right? So what do we look at? First and foremost, savings accounts, individual savings accounts are ISAs. Now, what is the objective? Remember, we want to put money in an account where you don't have to pay taxes. And savings is one way you save or basically kind of not bring down your tax liability. Remember, we told this in the first chapter. So, what is happening is the objective is to create an income, is to invest in an account that will create income that is exempt from tax. Okay, to create an income that is exempt from tax. Now, again, when it comes to this, there are certain subscriptions and certain things that you should be aware of, right? So, how much it is, what it is, and all that we're going to look at in the coming session, right? But ISA is what it is. Again, please don't confuse this with the ISA you learn in FR. Sorry, double A. Right? So, brief on ISA and how can it help the taxpayer, right? It can basically help the taxpayer by bringing down the overall tax liability, right? Guys, I want you to have a look at these 10 things, all the 10 things, and let me know what is your overall understanding out of 5 for these 10 topics that we have covered. In fact, this is basically we started from the beginning of the 3rd chapter. So go through this overall and see if there's overall, if everything is okay. Guys, before moving ahead, before moving on, I mean, I would want to kind of give you your last 10 minutes of review now itself, because I would want that this much is 200% clear. So basically 9 plus 15 plus 7 plus 19. These are the topics that we've covered till date. Okay, so I would want you, before we move on, to be comfortable with this much. So I would want to give you your last 10-minute review time now. Go through it, everything, through your notes. You have your notes, right? Go through everything and see what you have done, what we have done. See if everything is clear, comfortable. Okay, so Sneha, if you have to rate your understanding out of 5, how much will you be? Right. Um, Chirag, if you have to rate your overall understanding out of 5, how much will you be? And Aditya also. Okay, so Chirag, about this small change that we're talking about, I will tell you exactly what that small change is. And the only change from what we have seen so far is only in one aspect, right? Where we're talking about which one is this? At least for now, I'm saying it will fall in this aspect from what we have seen today, right? Apart from that, everything else is as usual, and I'll explain to you what that is in the coming session, which is tomorrow. When is it? Monday, Tuesday, Thursday, Friday, right? Your class. Yes. So, guys, we have almost completed the third chapter, and the objective is to finish off your syllabus as soon as possible so that you have sufficient time for exam preparation. That is the idea. And also, we will be uploading, as I mentioned, in the coming week, we will be uploading questions where we are solving exam kit questions so that you can start exam kit simultaneously. You don't need to wait. By the time the syllabus is over, I want you to be done with the textbook, Kaplan kit, PPP kit, everything. So the last few days, last 2 weeks that you have, that is only going in revision and mock exams and not in studying the kit. So when that by the time you finish the syllabus, textbook is over, Kaplan kit is over, PPP kit is over, study her practice questions, we have practiced enough questions for you. All that should be completed by the time we finish the syllabus. So suppose I finish the syllabus by 20th of May, right? By the 20th of May, textbook, Kaplan kit, PPP kit, study her practice questions, everything needs to be done. So that the last 2 weeks that you have are spent in just mock exams, revisions, going through examiners' reports. All that we will make a video on. We will make a video on going through all of that, right? So that your marks, it's not just a pass mark, but you score exceptionally well, right? So that is the idea. And as I mentioned, every Friday there will be a test assigned. But we haven't assigned any test today because obviously it's your first week. So from next Friday onwards, mandatorily, there will be one test on the LMS that you should do. That test will be from the textbook, from the Kaplan kit, BPP kit, study her practice questions, everywhere you will have questions. It will be MCQs, but you will have questions from every possible place. Yeah, I will also ask questions from the study hub quizzes. After each chapter, there's a quiz. So you have to make sure that you are studying every week as if your exam is after 1 week. So study these 5 chapters as if for those 5 chapters, exam is coming. That should be the idea. That should be the overall concept that we will implement. Okay, that is all, guys. I mean, we can close a little earlier. And that is all. On Tuesday, I'll complete the third chapter and we will move to the fourth chapter. But what I want is, I want you to make indexes for each date so that I can ask you 27th, whatever we have done, 28th, whatever we have done, 25th, whatever we have done, and on the first day, whatever we have done. Is it clear and comfortable? Right? So please make sure that you have your index 28th today. Right? And Aditya, if you can share with me that Word document, I will have a look at what you have done. Okay, that is all. You can leave, guys. Thank you so much.